Struggling with prop firms? Let's go. Hey guys, okay, today's topic is going to be about, are there more ways to win in trading or are there more ways to lose in trading? It's going to be a very detailed one. I'm going to be showing you how to draw zones. I'm going to go into more detail with this as well, and how you can pass prop firm challenges comfortably. If you've been watching my channel for a long time, I've shown where I'm passing, even my students, and where I teach my one-to-one mentorship, they're aware, and if show my community where I'm catching these 1 to 9s, 1 to 10s quite comfortably, passing prop firm challenges, passing phase 1s, risking only 0.5% in one trade, catching 1 to 15 RR trades, passing phase 2s in one trade, and just making it look very quite simple. And my channel's always been about, how to simplify trading. So today's topic is going to be about, are there more ways to win or are there more ways to lose? Now, obviously, some of you might be like, yeah, we know the obvious answer. So what I did was basically, first I typed this on Google, right? Are there more ways to win or are there more ways, to lose in trading? So obviously we've got these risk reward, so it's not really a clear answer what I'm trying to say. So what I want to first of all do is minimize this so you can see focus better on here. Okay, so so then not really a clear answer, right? So then I thought, okay, why don't I ask the main man himself, Mr. ChatGPT, and he can one moment, let's go to ChatGPT. So here we have, there are more ways to lose. How crazy is that? Are there more ways to lose in trading or more ways to win? What I just typed in here. There are more ways to lose in trading than to win. How crazy is that? The reasons: human psychology is biased towards mistakes. Markets are complex and uncertain. Lack of discipline is common. Winning requires edge and consistency. Now this is, winning requires edge. Edge is the biggest in my eyes. If your psychology can be on point, your risk management can be on point, everything can be on point, but if this one thing you do not have, your edge, the whole ship sinks. It's not going to work, right? You can be disciplined, you can be consistent, but if you do not have an edge over the market, because like it mentioned, there are many ways to fail, right? I read somewhere as well, there are only a few ways to win, but there are infinite ways to lose. I'm going to go into more detail. Let's see what comes up. So I was supposed to go into more detail or go into detail. Well, okay, pretty much the same thing. Why there are more ways to lose in trading? Yeah, psychological pitfalls. You can see here, right? Look at this, unexpected news, right? How crazy is that, right? Institutional orders, liquidity gaps, economic data, time of the day, session. You might be trading in the wrong session, revenge. You might be trading the wrong currency pair. How crazy is that? It's these small little tiny little things. Well, I know they mean a lot, but it's crazy, it's insane. You have to have, it's like pick locking, right? You have to get every single thing perfect. Trading the right currency pair, trading the right time frame, trading the right strategy, having the right mindset, if you're imagine just going to a fight with one of your family members, broken up with with your partner, had a bad day at work, all these things, and they could just come to trading and it'll have a negative impact on your trading. You got FOMO, overconfidence, impatience, and the crazy thing is, imagine even when trading is going the right good for you, you could still mess up. Why? Because you gain overconfidence, euphoria, and it's starting to mess up more. That's crazy. Lack of structure in most traders, no trading plan, random entries and exits, switching strategies, strategy hopping. It's crazy. It's crazy. Success requires a narrow, disciplined path. It's insane. In summary, winning requires a working strategy, discipline, risk control, and emotional neutrality. I don't know if I hope I pronounced that right. Losing happens from dozens of psychological traps, lack of rules, variance, overtrading, and randomness. So this is why most traders lose and why the odds are against you unless you systematically reduce error and stick to a proven edge. So this is basically, okay, now I hope you got the so you got idea from all this. Now you got to find, and let me explain to you what my edge is, how I use it, and what gives me an advantage over the markets on a day-to-day basis. So let's go back over to the charts. So first of all, what I would say is, you know, when you come into that, obviously we're using again the gold chart, you want to stick to, you know, a small amount of time frames as possible. Obviously back test, but you want to stick to, obviously I know I've got quite a few here, I'm just going to be using this for the few examples, but you know, you want to stick to a few as possible, right? It increases just by reducing time frames, it increases edge comes in small little percentages. One edge could be 1%. So I'll give you an example, and this is what I do. It's about collecting gems, right? And you put in these gems, these edges inside a bag. The more edges you have in your bag, it doesn't matter what percentages, right? And so I'll give you an example. Psychological edge could be your, you know, it can help you or increase your edge 50%. Risk management increase another maybe 80%. Let's just right. So the more edge, it's not about edge has to be out of 100%. No, it can be out of 1000%. So I'll give you an example. This is how I look at it, right? Psychological, let's just say 50%. You know, risk management 80%. So if we add those together, you know, 130%. So far my edge is 130%. So I want to be more and more charged up. So we got another one is, you know, understanding of a single currency pair that I'm trading, for example. The less as well, the better. You know, the characteristics. So gold, I'm only sticking to one, for example, right? So let's just say that's 100% itself. I'm only sticking to one. I only have to focus on one. So now from 130, now we're going to 230%. So it's like all these things, you know, understanding of charts, the candlestick moves, you know, candlestick patterns, can you read them? Let's just say that's added in another 30% if you could possibly, you know, if you could understand and read them. You know, all these things you got to add together. My understanding on how to draw my zones, that's probably mine biggest edge, right? I would call it 100%. That edge itself for me is 100%. So now I just bumped up on again 330%, whatever it was, you know, whatever it may be. But all these things you got to add all these edges. If I have a less amount of distractions in my day-to-day life, that is also an edge. So when I come to the markets, I come to the markets with a, you know, good mindset, right? So I'll be able to handle losses better. If, you know, I can let me think of another one. My risk to reward is another edge, either whether it be 40%, 50%. You know, if I'm on average, I like to go for a 1 to 5, 1 to 6, 1 to 4 sometimes, you know, or bigger, or then start trailing my stop loss. Even trailing my stop loss is also an edge over the market. I always say is, you know, with the you know, with these prop firms, like, well, prop firms and also the charts, look at them as an individual, as if it actually is a person, right? This person is trying to get money out of my pocket. I'm trying to get money out of this person's pocket into my pocket, right? So that's the best way I would advise. You know how you want to look at the charts. You know, don't forget it's me. The charts are against me. No, this person. He's got an edge over me. What edge does this person have over me? Well, you know, he might hit me by like, and maybe there could be a gap in the market, and I'll be unexpectedly, you know, hit my stop loss. Might get triggered, and where I'm supposed to lose maybe 1%, I might lose 2%. So me not knowing when these gaps might happen, so this gives the markets an edge over me, right? Another edge could be, even though there's an Asian session, maybe there could be temptations for me to trade in Asian session. And we all know, like, the less liquidity, more chances of, you know, spreads going worse and being worse. More spreads, the worse they are, the more commissions you have to pay when they hit your stop loss. So that is an edge that this market has over me. So you gotta identify and look at, you know, so this is again, look at all these ways you can lose, money in the markets. So now let's look at how you draw these zones. So you can stick to 1 hour time frame, 30 minute, 4 hour daily, pretty much whatever you want to do. And you want to look at market rejections. So you can even use the line chart, you know, where these sharp curves are happening. But normally when price is just, you know, choppy like this, consolidating, just leave it alone. I normally look for breaks and retest. So let's just say, for example, you got equal highs here as well, right? So wherever a bullish candle turns bearish instantly, 2 candles are more than enough for you to have a support resistance level. Now, first of all, I'll make something very clear as well. This is not the break and retest that I show to my students. And in my mentorship, link will be in the video description. We're up to about 1,300 members plus, students passing problem challenges, getting payouts, you know, so on, so on. Me passing problem challenges, 1-2 days, 1-2 trades. It's all in there. Live trades, winning trades, losing trades, you know, it's all there. So link will be in the video description if you want to join. Yeah. So let's get back to the point. Okay, let's get back to the video. So now I can see a breakout. Now I don't sell from resistance, I don't buy from support unless I get my breakout first. So in this case here, now this is a strategy which also has an edge. I want to make this clear, but it's not the strategy that I trade myself or show the students, because that strategy, the breaker is still a breaker retest, but it has a bigger edge, right? So, you know, in terms of confluences and, you know, the quality of the zones, so it has, and that's why I'm able to get these big risk rewards. So the edge is much stronger. This strategy still works. People normally sell this in a course. I'm giving it out for free. I do this all the time, you know. But yeah, so this is so this still does work, by the way. So anyone thinking that if I'm giving this for free, it doesn't work, no. So basically we get our levels of break even here. So let's mark this out first, right? So what we'll do is click on this one. So we got a break here. Let's change the color of these. What color should we make it? Blue? Will it stand out? Okay, perfect. So we got breaks of here, break of here, a break over here. We got a break over here. So you can see all these opportunities to take trades. These are all opportunities. I'll be going into dissecting these. We got a break back up here, right? And we got a break going down here as well. So we got a break down here. This is support being respected. Remember, you want a candle close for it to be confirmed, you know, a confirmed break. Price breaks through, comes up. There's no break here. These are just wick rejections. There's no break. Price comes up here. There's a break here. You get the idea, right? Okay, this actually is not a valid one because price, we just create this zone here, right? It's just broken through. If it would have just come down here and then see, this is too well, actually it is, but I just don't like, let me just, you know, actually it works. Yeah, apologies. So okay, that's enough for now. Let's click off this. It's gonna draw another one. I know, let's delete this. Okay, so let's work with what we have so far. So obviously we got multiple rejections here. This is my resistance. We get the candle breakout. So let's see how this would look on a smaller time frame. This is clean. This one here, I like this one here, right? This one's clean. Let's go to a smaller time frame. Let's see what it shows. Perfect. Nice solid breakout. See, now we've been in a bullish trend, but now obviously we've got a bit of a shift here. Now price is resisting this. So we got a breakout. Let's go to another small time frame. And what kind of an entry? I mean, this is a huge bearish, super strong bearish candle. I don't like this simply because the size of this, my stop loss would have to be really big. You want to look for something, and again, this is when you have to sit on your hands, right? Don't rush into trade just because the entry. You know, an edge also is that you can have over the markets is when you see a potential, not 100%, a potential setup forming, and you still do not take that trade. Or let's just say, even if you try this, by the way, try this. Resisting the urge to trade is also an edge over the market. Remember that. If you're seeing this, you know, your pattern forming, everything, your, you know, imagine one day you get an A plus setup. I dare you to avoid that trade, even if you get your A plus setup. Fight that urge. That is also an edge. So we've got a bearish candle form here. We can always go to a smaller one, refine this as much as possible. Yes, not really any candle that I'd like here. I wouldn't take the trade. That would be my advice. Ignore it, right? So I just call this a void, like, you know, I'm not gonna take it. So we'll color it purple. So void. Bullish trend, perfect. This is what we'll, you know, ideally we like to see. So now we've got obviously our breakout. Let's see if we get in on a smaller time frame. See, okay, you got a bullish engulfing here, right? Now this necessarily does not mean you enter straight away. Let price retrace a little bit. Again, patience, fight the urge. Let's see on a small time frame if we can see any. Perfect. Bullish engulfing. Take the trade. Now ideally, right? Is this a, yes, there's super strong bullish candle here as well. Ideally, you want price to hover around this area, a little bit above the zone. Even though price, look at this. This is why this area is first of all getting respected. You got your super strong bullish candle, price comes back down. Let me just move this, so you can just color this one green, because it's worked. You know, it's valid. What I'm trying to say is worked. So price, look at this, how it is perfectly respecting this level, these levels. It's got a small 2 minute, so you get a better entry. We've got a bullish engulfing here, this one here. So let's make this smaller and put it over here. Okay, we've got even a super strong bullish candle over here. So let's just say you took it after this one, stops below this area. I see, this is what I mean. You ideally want price to be down here, so you can put it below near the zone. You know, better. You want more support levels, but obviously, you know, the highs have been broken, so you can have it below here. And then ideally, whatever you want to go for, 1 to 3, 1 to 4, whatever it may be. You know, okay, this, I think this even goes to a 1 to 4, which okay, 1 to 6. Keeping it very simple. Let's change the color of this. Yeah, a nice 1 to 6 trade, right? Super simple. Now, if you do this with other, you know, try backtest this, try this, and if there's still any confusion, you know, join the Discord community, send me a message. Link will be in the video description. I don't want to make this video too long, but yes, there are more ways to lose in the markets, but you know, it's all, the way I look at it is millions of ways to lose versus your few, you know, how can I say this, the few edges you have, right? But if you have the correct edge and a strong enough edge, should I say, you know, it doesn't matter. It's few against the many. But if, you know, if you have the skill set, you're gonna win all day, all day long, all week long. You can still have drawdown days. I want to make that very clear. All week long, all month long, all year long. Yeah, hope you found this video. I hope you found value from this video. Take care. I'm out.